Thank you for inviting me to speak at OFN's first ever virtual annual conference. Your conference theme, Combating Economic Inequality by Matching Capital to Communities in Need, dovetails with one of our strategic priorities at the Atlanta Fed, enhancing economic mobility and resilience, particularly to low-income and moderate-income communities and communities of color. This year, a pandemic and attendant economic disruption have laid bare and exacerbated deep-seated disparities along racial, geographic, occupational, and gender lines. Throughout this crisis, I have seen CDFIs do what they do best, put their clients first, and meet communities where they are, providing advisory services and products when they are sorely needed. Thank you for your essential work. Now, some of you may have read an essay I wrote on the moral and economic imperative of ending racism in our country after the police killings of George Floyd and other Black Americans. In short, my message is that racism is a yoke that drags on the American economy. We can no longer afford it, morally or economically. We continue to leave too many of our citizens marginally connected or not connected at all to the labor market and other engines of economic prosperity. We lose their potential productivity, their creativity, and their innovation. These race-based inequities are costly at a macroeconomic level. A Citigroup report recently estimated that systemic racism costs the U.S. economy $16 trillion in output over the past 20 years. This is important to the Federal Reserve, especially in terms of our full employment mandate. We are looking for solutions to unleash this economic potential. And one important effort in this regard is a webinar series we are calling Racism and the Economy, which my bank launched in conjunction with the Federal Reserve Banks of Minneapolis and Boston. I hope you had a chance to see our kickoff program, and I encourage you to join us for upcoming sessions. As you probably know, the Federal Reserve System surveyed CDFIs on how COVID-19 has affected them. I'd like to thank our partners in this effort, including OFN, and also those of you who participated. What we learned was that CDFIs have generally continued to receive capital at pre-COVID levels or above. And this is good news. But more than a quarter of CDFIs said they experienced decreases in loan loss reserves from late 2019 to mid-2020. Those funds are vital for CDFI sustainability, and this is a source of concern. Now, we collect and publish information like this to amplify the voices of leaders like you who work directly in communities. It is important that we highlight what is working, as well as what communities need from policy and investment interventions. In this context, your thoughts on Community Reinvestment Act modernization could be extremely helpful as we work to adapt the CRA to how banking works today. I invite you to weigh in on the Federal Reserve Board's advance notice of proposed rulemaking process. We are accepting comments until February 16th of 2021. Your voices will help financial regulatory agencies, including the Fed, ensure that the CRA meets the needs of you and your constituents. Now let me quickly discuss two topics we focus on at the Atlanta Fed, where CDFIs can continue to help blaze a path toward an inclusive response and recovery: small business, and jobs and workforce development. I'll start with small business. OFN and CDFIs have long partnered with the Federal Reserve to communicate with small business owners through the Small Business Credit Survey. Thank you for the support on the canvas that closed in October. We're cleaning and analyzing the data, and we hope to publish results in February. From small business credit surveys before the pandemic, we learned that 56% of small businesses reported growth by the end of 2019, though just as many relied on personal savings or friends and family networks to cover business expenses in the past 5 years. We know that access to this informal financing network is limited for people of color. Therefore, along with the Kansas City Fed, we're releasing a Small Business of Color Recovery Guide this month. The guide offers ideas about small business credit and capital, education and training, policy recommendations, and community support. Virtual discussion sessions will also help communities use it. Another small business issue is a bit less direct, but no less important. Regarding the critical task of getting people back to work faster, training alone won't be enough. Many people, especially women, need a safe and nurturing place to care for their children, and small businesses that provide childcare will be very important. There are clear challenges here, though, particularly where financing is concerned. So, along with several reserve banks, we detailed a number of these in a publication titled Briefing on Childcare Funding and Policy Considerations in Response to COVID-19. Now, CDFIs have long played a role in this space. Our colleagues at the Minneapolis Fed shared examples of how CDFIs have helped strengthen the early care and education sectors by conducting market analyses, developing targeted financing products, integrating training and technical assistance with childcare provision, and forging partnerships with traditional financial institutions to bolster funding. And I have no doubt that CDFIs will be an important source of solutions for today's crisis as well. Let me now turn to jobs and workforce development. Last year, we co-hosted the Financial Innovations Roundtable on aligning capital, training, and economic mobility, which sought to strengthen the connection between the workforce development community and CDFIs. Since then, we've sought to identify and highlight practical ways CDFIs can collaborate with workforce development and training programs. As one example, Freedom First Credit Union in rural Virginia developed a loan for students earning certifications in fields including commercial driving and nursing. Freedom First combines this credit with financial coaching to improve the borrower's financial stability. Without these loans, Freedom's leaders have told us that many of their borrowers would turn to predatory lenders or high-interest credit cards. So this has proven to be a real benefit. Now, I learned about Freedom First's work at last year's Financial Innovations Roundtable. I strongly encourage you to attend the 2020 version of this roundtable, which will be held on November 17th and 18th. Now, this year's program explores the role of CDFIs and others in climate and resilience finance, and it'll be hosted jointly by the San Francisco Fed, the Center for Impact Finance at the University of New Hampshire's Carsey School of Public Policy, and the Climate Safe Lending Network. Now, through survey results and data, my staff and I see what we term a less than recovery, one shaped like the mathematical less than sign. Parts of the economy and population are prospering, moving on an incline like the upward sloping leg of the less than sign. People on this slope include professionals who can work remotely, along with those working in sectors like home improvement and groceries. Unfortunately, a considerable portion of the economy and population is going the opposite way, as represented by the descending leg of the less than sign. These include those working in businesses relying on people congregating, those working in restaurants, hotels, and performing arts, for example. As policymakers, our goal should be to ensure that the suffering of people in this group does not become permanent, lest recovery take far, far longer. And I'm looking to the CDFI community to help us make sure this does not happen. The CDFI industry has been a key player in helping communities develop and recover for decades, and I have admired your collective innovation and persistence over these many years. As we come to grips with the scope and scale of the challenges ahead, those qualities will be needed more than ever. I think this is a historic moment and an opportunity to create real change. I hope that you will see the Atlanta Fed and the Federal Reserve System as partners in this quest. Thank you, and enjoy the conference.